Okay, daily bias slash draws on liquidity. DLs. So, to understand daily bias and draws on liquidity, you sort of need to understand how the market moves first. And why the market moves, sorry, not how, why. Essentially, the market moves for three reasons. One, liquidity hunts. Two, rebalance inefficiencies. I don't know if that's spelled right, but I don't care. And three, equilibrium. And I'll show you an example of exactly why knowing this can help you so much from literally yesterday's AM session. And my advice sort of is don't really, I wouldn't say not use, but don't be married to a bias. Don't come into the day and say, oh, yep, we're going to be selling off. Like I'm bearish on the day, because that would have been incorrect yesterday. And because you don't have a draw in liquidity, that is why your bias would have failed coming into AM session yesterday. And yeah, you can see just did the complete opposite of sell off. And that is because we had clear draws on liquidity. And how do you find your draw on liquidity? You ask yourself these three things. Which liquidity can the market hunt? And that would be in the form of, I would do this from strongest draws to weakest draws. And we'll start with liquidity hunts. So essentially highs, lows. And the strongest draw would be session highs and lows, and then equal highs, or just equal highs and lows, and then obviously external swing highs and lows. And I'll get into some other ones that nobody really talks about afterwards that are also considered strong, but we'll move on to rebalancing inefficiencies. So what's this? Just high time frame, fair value gaps, and of course new week opening gap. And as you can see, huge new week opening gap, just drawing towards that like crazy. And oh no, we didn't, but we had a new week opening gap. Yeah, we had a small new week opening gap here, but obviously we already drew towards that. On NQ you can say it better, but I'm not going to waste your time and show you. So now equilibrium, I think we all know what equilibrium is. Just the 50% of a swing range, or a 50% of an inefficiency. So some draws that nobody really talks about, but in my opinion are also very strong. Accumulation leg highs slash lows, and market maker climax. Yeah, market maker climax. And if you don't know what, I think everyone would know what the pair 3 accumulation leg highs and lows would be, but I'll draw it out just so I can show you. So power of 3, we have accumulation, then manipulation, and then we'll get an entry trigger here. And like 90% of the time, or 80-90% of the time, we will come back at least to the high of this range and sweep it out. If not, then we will. That's very, very high probability draw. And then market maker climax on the high time frame. But this market maker climax you don't really see often. And I think you will know what a market maker model is. But we have this side of the bell curve like this, market maker sell model and then buy model, and it can be the opposite way. So buy model and then sell model. But up here, this is what's considered the climax, and that is where price will draw to. And for example, if we were trading here, the next draw would be here, and then here the next draw would be here, and then so on and so forth. So hopefully that makes sense to you, and I'll show you why yesterday would be a day that daily bias would have failed you, and it's because you wouldn't have asked yourself these three things, which I did, and obviously I knew price was going to go up. Didn't catch a trade though. I removed my limit order, and as you can see, I'll go into the high time frame. This is a bit annoying, but I'll just get rid of this. So I'll get rid of all this too, and yeah. Oh, okay. So 1. What liquidity can the market take? I did want this to be an immediate draw, and then we didn't do that. But if you go to the high time frame, it's 4-hour gap, bro. But as you can see, this 4-hour gap unfilled on both NQ and ES, which it did get filled. What the? Holy. But yeah, as you can see, it did get filled before continuing lower. And again, I don't know if we hit equilibrium of this leg. No, I don't think we did we? Hold on. But yeah, you can see equilibrium of the leg, rebalance plus a high time frame fair value gap to rebalance. So we had 2 of our 3 things play out there. Rebalance inefficiencies, yep, did that on the 4-hour, and then equilibrium, which we did do as well. And then as you can see, as soon as that was finished, we immediately sold off. So that's why daily bias, draw on liquidity is more important than daily bias. If you have any questions, let me know. I'll be more than happy to answer, and I could maybe hop on a call and show you. So yeah, cheers and enjoy your days.